All right, let me take you straight to the markets now. Let's get a sense of what's playing out in Africa and most of the markets we track in a global space. And there you have it for the local bourse, 99,000, holding on to that level. This is intraday trade, 0.11% up. Is it convincing enough? We're going to find out at the close. That's in a moment at 2:30. For South Africa, 87,276 points for the All-Share Index, up almost 1%. Other markets we track in Africa, we see North Africa, they're 30,440. That's for the EGX 30. Marginal rise, 0.09%. Yesterday's close for the Nairobi Stock Exchange, 115 points, 0.42% rise. That's for yesterday's trade. Well, let's look at the fixed income market now. See Nigeria's one-year Treasury bill yield. It hit about 26.02% at the primary auction yesterday. Let's hear more now from Chuka Nwachukwu, Head Assets and Balance Sheet Management at UBA. Great to have you on the show.
Thank you, Ladi. Good afternoon.
Good afternoon. So, what factors will you say, contributed to this increase in the one-year Treasury bill yield? That's 26.02%, during that auction.
Yeah, thank you. Like you rightly mentioned, the 1 year printed at 20.65. But then the other maturity, the 91 day, and then the 182 days maintained 17 and 17.5 respectively. Regarding the factors that affected the yield, first of all, the market has to react to the increase in the MPR by the CBN. Of course, as a result of trying to stabilize price stability, and then trying to also make sure that you make the yield attractive for foreign investors to come in. And so, investors will obviously demand for higher yield. Usually by this time of the year, we expect a moderation, decrease in terms of the yield. But then because of the high inflation and then what the government CBN is doing in the in the economy in terms of increasing MPR, investors obviously will demand for higher yield, and that's what we've seen in the market this week, especially as regards with the auctions.
So how did the central bank's auction size, of October 23rd, how did that compare to previous auctions, and what implications might this have on future borrowing?
But the auction size is as a factor of what is maturing. For example, about 374 billion matured, and then that also was sold. However, subscription was much higher, well over 480 billion. So compare it to that of last month, for example, auction, we saw a significant increase in the volume. But however, what is important is the amount that is sold. So the amount sold, was much higher than what was offered. That which indicate that the market is still liquid in terms of liquidity, even though liquidity has been very tight. We saw oversubscription, like I already mentioned earlier, for over 480 billion. And so that obviously will tell you that there's more appetite. There's still appetite by investors to try to invest in the T-bills market. To be honest, if you have a market where the yield is above 20%, is quite lucrative. Not minding the fact that at this level, we expect to see usually by this time of the year, we expect to see moderate decline in yield. But based on what is happening, and then of course the need to attract foreign investors, and then of course local investors, DMO as well as the CBN has to make the yield attractive, and that is why we've seen these elevated yield levels.
Right, and do you see these yields going higher in this fourth quarter?
I think that for NTB, for example, which is obviously meant for the locals, we see the yields between this level at max 21% going into the end of the year. But for OMO, which is obviously to attract foreign investors, of course, we continue to see elevated, especially around the 1 year. We see between 23 to 25%. So based on the fact that the government, like I said earlier, is trying to woo investors and, of course, trying to ensure that they borrow quite a significant amount before the end of the year to be able to fund some of the obligations, we still see a yield attractive. As long as the yield is attractive, we continue to see investors.
Right. All right. We'll keep watching out for how investors react going forward in the fixed income market. Thank you so much. That was Chukan Nwachukwu, Head, Asset and Balance Sheet Management, UBA. Thank you so much.
Thank you, Ladi. Thank you.
All right, let's get a check of what's happening with the U.S. Futures. Now we see the futures linked to the S&P 500 traded. That rose in the morning, but 0.40%. But we see the Dow Jones Industrial Average futures on the flip side, 42,727 points. That was marginally down about 0.03%. But we're seeing a lot of volatility right there. Then we see after hours trading, Tesla, that surged about 12% after the electric vehicle manufacturer beat the street's profit expectations. That was in the third quarter. And the tech giant International Business Machines, that fell more than 2% as consulting revenue narrowly missed analyst estimates there. Then we'll see the tech-heavy NASDAQ for the NASDAQ futures, 20,379 points, showing the 0.79% increase. Let's get a check on Asia now. Asia Pacific markets mostly fell after U.S. stocks dropped last night. Nikkei 0.10%, up 38,143 points. The Kospi fell about 0.72% at 2,581 points, while Hang Seng Index 1.23% down. Other markets we track in the region, that's talking about the Nifty 50, that's down about 0.15%, and the Shanghai Composite down 0.68%. So majorly, the color right there in the Asia street is mostly red. So that's how most of those markets we track are looking. But let's take it on to Europe now. Let's find out what's going on in Europe. No woman tipped to